the markets continue to stay in consolidative price actions. Whilst we're seeing downside bias in risk markets and upside bias in the dollar and yen, there was no strong sustainable momentum so far. The sell-off in US equities in the past 2 days triggered some worries, but that wasn't held up by Asian equities today. The Nikkei is up 43 points while the Hong Kong HSI is up over 250 points on the prospect of a Chinese stimulus program, as it's reported that China could eject as much as $180 billion into the money markets. Euro US dollar and Euro yen continue to hold on to the 1.2816 and 99.52 support level. Aussie dollar US dollar also staged a recovery and is back above 1.04 after dipping to 1.0328 earlier this week. Spanish 10-year yield does stay above 6% for the moment, but that could just be markets testing Spanish nerve as the country is still hesitating about seeking a sovereign bailout. The main focus will remain on the Eurozone in the near term, but we still don't expect the pullback in the euro to go much deeper. Spain is set to unveil the first draft of its 2013 budget today. That could involve the setting up of a new agency to monitor the progress of the fiscal adjustment program. It's reported that there could be up to €39 billion worth of austerity measures, including savings, tax hikes and structural reforms. Spanish Prime Minister Rajoy said yesterday that if borrowing costs were too high for too long, he can assure 100% that I would ask for this bailout. But before that, Spain would like to make use of the new austerity program to convince the ECB that no tougher measures are needed even in case of a bailout. On the negative side, the Bank of Spain has warned that third-quarter output dropped at a significant pace, and there are chances that Rajoy could project a deficit of 7% of GDP or higher, due to the recession, and miss its target of 6.3%. Another focus of the day will be on Italy's auction of up to €7 billion of debt. That includes up to €1 billion of 2017 CCTEU, €3 billion of 2017 BTPS, and €3 billion of 2022 BTPs. Italian 10-year yield followed Spain's high and is at 5.23% for the moment after dipping below the 5% level last week. Italian Prime Minister Monti said earlier this week that the risk of losing sovereignty is over and he has no intention to ask external aid. Monti also pledged to further strengthen fiscal sustainability and enhance potential growth and won't overlook the importance of the EU measures to strengthen governance and fiscal integration and deliver them on a national level. In the US, Chicago Fed Evans warned that the Fed cannot be complacent and assume that the economy is not being damaged if no action is taken. He said that modest, cautious, safe policy actions will risk a Japan-style loss in a decade. Evans said sustainable job growth of 200,000 to 250,000 per month for several months is needed before revisiting the highly accommodative monetary policy. Evans said that inflation risks are so far well managed, and unemployment will only decline slowly to the 7% level at the end of 2014. On the data front, the New Zealand NBNZ business confidence dropped to 17 in September. German import price rose 1.3% month-on-month in August. Eurozone M3 confidence indicators and UK GDP second quarter final will be released in the European session. From US, second quarter GDP final, durable goods orders, jobless claims and pending home sales will be featured.